Hello and welcome to the week of July 9th, 2018, the Humble Investor Bull Bear Market Report. My name is Adam Straseske. If you want help growing your IRA, your 401k, your stock account, I can help. And here are some important disclosures. Just remember, the only thing certain about the stock market is uncertainty. That's why we have rules and that's why we have a strategy. So here it is. Here's our agenda for today. Same as always, we're going to start at the top and then we're going to get down to the nitty-gritty of the operating plan. First things first, barometer strengthened a little bit. We got a little bit more bull market force because of some economic data that came out. Frankly, the fundamentals look good in the stock market right now. And the technicals, some of them look good and some of them, they're basically mixed. You know, we're in a sideways trading market, but when you're in a sideways market, it goes to the trend, and the trend is up, or the prior trend, I should say, and the prior trend is up, and so we're gonna give it to the bulls right now. 12-month momentum, S&P still greatly outpacing the MSCI All World ex-USA Index, both of them above Treasuries, even though the MSCI All World ex-USA Index pretty darn close to getting underneath Treasuries. If it does, then we'll want to stay clear of all international markets if that becomes the case. But right now, they're still ahead. Correction risk, you know, it doesn't look like there's a lot of risk for correction. We have the only thing signaling right here is a little bit overbought on the longer-term indicator. But frankly, I like to see that. I like to see a big pop in breadth, and that is good. That's a bullish factor, actually, even though it's overbought. So when you get a higher move and then a very overbought on the longer term, especially when the trend is up, then that's bullish. And so, yes, it's overbought, but you know, I look at that actually more bullish right here. So our negative, or excuse me, our positive reversal from last week looks like it played out, and we did have a positive week this week in the S&P 500. And here's a look at the S&P 500, up 1.52% for the week. Looks pretty good. We had a sell signal 3 weeks ago, a weak sell signal, and we got weak follow-through. We got two follow-throughs the week before last. It didn't finish on the low. The bulls took advantage of that this week. We got a bull breakout and a strong bull buy signal, and so that's good. We'll see if this is just a leg up, or if in fact it doesn't turn down here. But right now, looks pretty good for the bulls. And let's get into the operating plan. Monthly trenders still like preferreds. They're really bounced off of the lows here recently. And then U.S. small caps and U.S. growth. U.S. small caps basically almost on highs. U.S. growth is pretty darn close. And for a weekly swing, here's a list of them. And here's a look at small caps, up 3.2% for the week. Like I said, they closed. It looks like they've closed on the high, but they didn't quite make a trading high. So we're right there. And then you can see if you look down, the bottom chart is U.S. growth. We're pretty darn close, but nice buy signal there as well. U.S. Treasuries up 0.44% for the week, still at the bottom of that trading range. Can't seem to break down to the bottom, but we're going to stay in this one until we get a break below this level right here. The one looks like 142, 140 range, but in the vehicle that we're actually trading, still well within this trading range, so it looks good. Australia, big week for it, up 1.66%. Nice buy signal right there, and we'll see if we can break to the upside. Break this. This will be a bull flag. It's a bear channel. Every bear channel is a bull flag, and every bull channel is a bear flag. So that's what looks like this is turning out to be. Here's a look at the MSCI EAFE Value Index for the weekly swing, right down into our second purchase range. We're going to get into some of this if it does actually trigger the buy, which would be right about this orange line right here. That'll lower our cost basis and just add a little bit more risk to the portfolio. So we'll see if we get that, and we've got to stop right below here, represented by the red line. Don't know if it will trigger, and don't know if it does trigger if it will go up, but at least we'll get a chance to get to break even a little bit sooner if we do purchase some more. Healthcare up over 3% for the week. Looks really good for healthcare. Like the bull bar, how it closed on the highs, pretty darn close to it, almost on the highs for the week. So it looks good for the healthcare. I got a second purchase range down in here, pretty far away from where it is right now. Transportation, not quite as good, but still up for the week, 1.25%. Nice bull bar there. Not as big as these bear bars, but I'll take it, and it is a buy signal here in this range. And that's it. So for the monthly trend, I'm not going to add anything, but for the weekly swings, like I said, we're going to add to the MSI, that's spelled wrong. That's supposed to be an E there. And then the global wind energy. Don't have a chart of that one, but we'll add to that one as well, down in the bottom of our range. And then a new one is the U.S. Aerospace and Defense. And here it is. We've got basically a micro double bottom right there, and then we have a nice bear channel right here, and then this would be our a purchase if it gets to this green line. So we'll see if it gets there, but nice. It's okay buy signal. I'll take it, and if we do get it, then we'll certainly act upon it. So with that, have a great week, and we'll talk to you next time.